Welcome to the Trading Lounge, and starting with the Australian market and starting with CBA. And we've been working through this particular correctional pattern through here, as you know, the A wave, the B wave, and 5 waves for the C wave. And we were looking for a move down as wave 1 and back for wave 2. Then we'll be looking for 3, 4, and 5 down through to here. And the importance of this, of course, is that the ASX 200 can follow this particular pattern as well. So with that in mind, we can remove that. And, first up, I wouldn't turn bullish on this market unless we're above the 61.8 retracement level up here. And that means that we've got support on 5,800. So in my mind is that, we're still in a negative situation, and we'd need to be very selective in terms of what stocks we'd trade long in. So now, as you can see here, we're back at these old lows here at 56 number here. This 56 is always an important number too. It just seems to always have a lot of support on it. Not just 5,600, it could be $56 and so on. So it's always just good to note that number. I thought I'll just throw that in. So, if we looked at, CommBank, for instance, then we would be looking at this as a bearish situation through here, wouldn't we? I mean, even so, it's moved. You can see that it's in 3 waves, and that's bullish corrective. But because it's come all the way down through here, it's be part of a larger move to the downside. And we'd also expect support to come in off this particular level here as well. Now, it's a little bit difficult to count. I mean, this move down through here, as I mentioned yesterday, in this market, it looks like it's in 3 waves. But when I look at the cash market, the physical market, it's a very clean, clear 5 waves. And on the cash market at the moment, this other move down through here is currently in 3 waves like this here. That's on the cash market. So I just don't think that it's finished, So I think they've got something like this here to make sort of 1 and 2 and 3 and 4 and 5, something a bit like that, And I've got this as wave B coming down for wave C here, but it could certainly be wave 2 here and coming down for wave 3 here. So I've labeled it like that here. From this is wave 1 here, and wave 2 and wave 1 and 2 and 3 and 4. This other number here, the little 65 in here, is very important as well. The 5650 is a midpoint. So if that became a support, then you could look to the long side a little bit. And of course, this market will try to test supply, which is at the 50-60% retracement level, the 5,700, and also where it's failed as support here as well. So trend is definitely down, so look for weakness. We're expecting the European markets down further. They're in a little current rally at the moment. The Dow Jones, let's have a look at the US markets as such. Now, we noted this particular pattern through here as being in 3 waves and being corrective. So whatever happens over here is corrective. We're expecting a move up from that. But as I noted yesterday, we had this little wave C in here, and and also pointed out that the European markets have got further to move down. So it's kind of logical for this market to move down. And even once again as well, the European markets, perhaps I should have started with them, they're basically doing a little rally like this, and then they'll be moving down as well. So it's quite likely that, this can be down here further as well. So we're a little still unsure about the US markets. When I have a look at the Dow Jones, for instance, from its top up here, just on the 4-hour chart, it's got a very sort of clean 5-wave structure down through here. So I'm quite happy to really label it as wave 1 and ABC back for wave 2. It might not reach this distance up here of the 61.8 retracement level, but we need to sort of take it on board, because the Dow Transports is very weak. And when I have a look at the New York comp, for instance, not the Dow Jones comp, but the New York comp, it's got a real possible top being in play here. So there's not really a bullish picture here, but at the same time we haven't seen it, the market breaking down just yet, and it's just bouncing off the 18,000 here, the number 8, which is an important level. And if this became the resistance, then obviously we'd look further down and would look for this move here, an equal move of this size down through here as well. So, you know, once again, I'll just be sort of very careful what's going on here. The way that this sort of counts in here is, I thought I had that counted out there. Maybe it's on the S&P 500 here. So on the S&P 500 here, I've got this as a bearish count here as well. So we just need to note this a little bit. It's not the best looking count, but it's still valid. So 5 waves down for 1, back for 2, and then 1, 2, 3, 4, and 5 here, and then wave 4 here. And it does overlap here, but on the cash market, it's got clearance there. And then down here for wave 5. So 1, 2, 3. In fact, that should actually be here, but not to worry too much. But 1 and 2, it's got 1, 2, 3, 4, and 5 here for the third wave, the fourth wave. Oh no, that could be tucked up just in there actually. And fourth wave just here, and the fifth wave down here. So looking at this as the 50-60% retracement level here at 21.20, so the market would really need to find support. That 50-60% retracement level, that's from this high, this high here. So, you know, it's got a lot of bearing on being positive or negative above and below this level here. So 21.20 as a support would give us more of a bullish count from there. So I think while it's under this particular number here, and it can trade above it, but you know, really testing it as support is another aspect altogether. So yeah, while it's under this number here, then I think that we need to be mindful that it's bearish at this stage here as well. Now we do have a little A, B, and C into here, but I think it's just the A wave, so we'll see it be sold off, and we'll look for a nice correction that's a bit meaningful, because if it's going to be corrective here, then really that little tiny move there doesn't really rebalance this whole move down here, does it? It just doesn't. It's just too small. It doesn't have the right perspective, you know, the right sort of balance ratio, so to speak. So anyway, we'll keep an eye on it, and we'll keep an eye on both counts. You know, when I look at the Nasdaq, for instance, this is the this is the Russell here, and it's, you know, this move up here. You know, I've got 5 waves here for 1 and 2 and possibly 3 here, but at the same time, this can be an A and a B and a C here. So we need to take that top out there. It's slightly encouraging here, rough as a diamond, so to speak. But anyway, I didn't really want to look at that here. Didn't really want to look at Citicorp, Amazon. Okay. We've been looking at Morgan's and JPM Bank, and you know, we had from this high up here, we've got a clean, clear 3-wave structure here, and then this move up through to here, and an A and a B and a C here, with this low staying in play here. So it's while this low here stays in play here, then this market here is bullish as well. If it breaks this line through here, and we'll keep an eye on it, then we know the banking sector is breaking down at that point. So at least we've got something, because I think that when stocks get when indices get a bit iffy, then we need to revert back to, you know, the actual stocks that that make the move and create those patterns. Let's try to find. Okay, the Nasdaq here. So, you know, just going back over this, I know we've been over it, but an A and a B and a C here, we should see a new high above here. Okay, so it's likely that Apple will do that for us. We've got wave 1 and 2, and we've got 3 and 4 here. And, you know, like I mentioned, it is possible to put wave 5 here, you know, because it has made a new high here. It just hasn't finished it very nicely here. But for the time being, I was leaving it here. But if this low gets taken out here, or falls back, you know, cleanly through through this 4,500 here, then we've got a bit of a problem at that stage there, and would look for weakness there. But as it stands with Apple here, I've just sort of well, anyway, I've labelled it here, but from wave 3 here, an A wave, a B wave, and 1, 2, 3, 4, and 5 here for this wave here. So it's possible that this is an ABC pattern that's finished here. So really, long as it stays above this low here, then I think we've got to stop at 129 on this. So, you know, as long as this stays in play here, we can expect this market, the Nasdaq, to move higher. But a move through here, then we know that we've got a bearish pattern on our hands, okay? So I think that's important. The European markets and the stock 50, what we've been looking for here is that, well, an A wave down here, a B wave in 3 waves, and then 5 waves down for wave C here. And in those 5 waves, we can see we've got 1 and 2 and 3, and looking for number 4 now, and then down for 5 here. So, you know, another low in here. That's why I was thinking the US markets, you know, we shouldn't be too quickly to think that they're going to move to the upside, but we know those levels. So the 2120 support on that would take us to the upside. Otherwise, we should really conclude that there's more weakness to come here in this market. And when we look into here, this being much the same for many of the European markets, well, we've, you know, from wave 1 and 2 here, we've got 1, 2, 3, 4, and 5 for the 3rd wave. The 4th wave will pull back 38.2%, so the 35.90 here. So we can look at this as being, you know, if this was wave 4 in green here, then we would expect this bigger degree of structure, wave 4 here, to be a bit larger. And so far, well, it's sort of getting there, but I was thinking that this would be the A wave, a B wave, and a C wave back up to here, and then down through to here. So I think in terms of trading, what we'd be looking for at the end of the day would be after this is completed, and wave 4s can get a bit complicated and messy, you know. In this wave 4 here was nice and simple, and we may get lucky here as well. I mean, if I looked at reoccurring patterns as such, well, then that move up through to here would be that move there. This move down here would be this move down here. This little move up here would be this little move up here. That little move here would be that little move here. So it's possible that we're starting, you know, the little C wave here as an A and a B and a C, and then we'll be looking for 5 waves down here. And then we can start looking to the upside. But before we can go long here, of course, we want to see, you know, we want to get this first leg up here being 5 waves and a nice pullback here in 3 waves, so 5 and 3, and then we can look to build in this. But even in the bigger picture, we'd want to see a larger 5 wave pattern like this, because if we get that, then we know that we'll get another 3 wave correction here, and then another 5. If we get 5 here, we'll get 5 here. If we get 5 here, we'll get a larger 5 over here. It's as simple as that. The DAX is the same. So we're looking for an A wave and a B wave here. Yeah, so yeah, same thing really. So we're looking for 1 and 2 and 3 and 4 and 5 here for this move. And with that in mind here, just on the 1 hour chart here, same picture. It's a little bit lazier to get up here, not so much as the stock 50, because stock 50 has got some of the UK stocks in it. So yeah, but once again, we've got wave 1 and 2 here, and 1, 2, 3, 4 here, and 5 here. So definitely the 3rd is falling into place here. So we're looking for a retest of the 11.5 here, a medium level, carries a lot of weight, and then 5 waves down here. This 5 waves down here should be roughly the same length as this 5 waves here, and the same timing and so forth as well. I don't know if I've got that. I do have it on a bit more of an intraday here. Sorry about that. Yeah, well, wave 3 here, an A wave, a B wave, and a C wave in 5 waves. So 1 and 2 and 3 and 4 and 5 up through to here, and then rolling over through here. Yeah, so that's that. And the AEX, now this this market here, yes, it works along with the stock 50 and the DAX to a certain point, but it's not quite in sync, you know, because this low here on the 26th here for the DAX, for instance, was wave 1 over here, okay, and the high, the next, this made a new high here, the DAX didn't, so that would be wave 2 for the DAX. So, you know, there's a couple of things that we really need to look at here. I mean, first of all, this move down through here as wave A and this wave B here, it's very normal at minimum for wave C to come back to wave A here, at minimum, you know what I mean? But normally wave C can go lower than wave A here. So I don't know, you know, you'd think that, I think it's lagging the US, the DAX. So yeah, so it's out of sync by about 3 days really. So I think we need to sort of kind of get a bit philosophical about this and work a couple of counts. So first of all, I think that it is highly possible for it to move lower through here, okay? Maybe into the 480 area here. There's an old gap that was never covered at that point there. Not that this market covers all its gaps as well, so it does it to about 95, 96% or something. So so this move down through here, I mean, I've just got it labeled as wave 1 here because I can count 5 waves down here. So that's why I'm labeling it wave 1 and possible wave 2 here and 3 and 4 and 5. I mean, it's a bit sort of, you know, I don't think that it's possible that we could call this wave 5 here, but as you can see, it just doesn't really have the same sort of perspective and relationship and ratio in terms of structures, because this wave C, because I'd have to put the wave C there, and that doesn't, you know, the wave C should have some sort of equality with wave A, and, you know, at that size there, it doesn't. So I think we really need to sort of keep an open mind of it moving lower through here. And this is how I've got it counted. Now, I've taken this count in sort of sync with the cash market, the AEX, not the all shares, but just the top 25. So wave 1 and 2, and I know it looks a little bit odd here for wave 3 because but it's 1 and 2 and 3 and 4 and 5 here, the third, fourth wave here, trying to pull back to the fourth wave, 1 lesser degree, and then 1 and 2 and 3 and 4 and 5. Now, it looks a little bit odd, but I've taken that from the intraday cash market. That's why it looks a little bit odd. But my main point here is that this can move down here to complete another little 5-wave structure down through to here. So a bounce off 483, 485, so to speak, and then a rally from that point there. Now, as a rally, the 50-60% retracement level, see, I've got it here as wave 5 of 5 of 5. Well, not that, well, it can be, if I remove that and just put this as, it can be the end of it here, but I think we just need to be a bit careful about that situation. I think that it can just all be down for wave 1 and back for wave 2, which is around, depending where the low comes in here, around the 498 to 500 here as a 61.8 retracement level, and then down from that point there. The other point that we should also take on board here is that you know, lining it up with the DAX in a sense, but the wave structure here doesn't fit very well. But the DAX is got its third wave low here, so we'd look for a fourth wave here, and then a fifth wave down into the 480 area here, maybe lower, depends on what the stock 50 and the DAX and so forth does, but that would be lining it up with that market, and that's not too far out when we think about it. So if I've made a, you know, in those counts that I did before, if I've made a mistake, then this would be the answer to that mistake. So, but look, as I mentioned with the DAX, the DAX has on the 26th has this as wave 1 and wave 2 here, but we've got a new high here, so it doesn't fit properly, you know. So yeah, so anyway, that's where that is. I mean, the main point here is that it's in a bearish mode. It's not in a bullish mode in whichever way you look at it. So I think all in all, expect a market down to 480 and possibly 472 sort of area there. The FTSE's a bit of a nightmare really, and I just don't know the correct count here. I've got this as a high here. I can see that this is a corrective move down through here because of overlapping wave structures across here. So I've labelled it wave A. I can clearly see this is an impulse wave, so an A wave here, a B wave here, and a C wave up through to here to make a B wave. And then I was looking down for C in line with the European markets. This particular move down through here is not an easy count as well, but if I line it up with the other European markets that have easier counts, then I think that we've still got a little bit more to come down here. Once again, I wouldn't tempt anybody to go long here unless we had 7,000 as a nice support, or unless we can see a very clean finish down here somewhere and then an impulse wave up here, then we could look to go long at that stage there. Yeah, there's a couple of different, it's just a little bit sort of tricky to count. It doesn't make it easy when it's moved through the 7,000 here. Yeah, so I just really don't particularly want to go into it at the moment. You can do your best to count this on the way down here. It's just a little bit messy, and I'd probably lead you astray. So I think you need to trade what you see at this for this market here as such. So just not there. Alrighty, well, that's it. Thanks for tuning in, and I know that the markets are a little bit messy at the moment, but hey, you know, markets are either trending up or down or correcting, and sometimes they're clear, sometimes they're not, and we need to breathe with that understanding and choose our moments carefully. Alrighty, cheers.